Listen, the market didn't go anywhere. It didn't do anything. It's still chopping around and it's still maintaining below this trend line. We're still in a large rising wedge. In today's video, we're going to take a look at the large tech stocks because there's some interesting things going on with the large tech stocks. All right, so we're going to take a look at those, the Russell, the SP500, and the VIX. All right, so without further ado, let's get started with the video. First and foremost, number one, NVIDIA. We shorted the top on NVIDIA. When no one in their right mind would try to short NVIDIA, we ended up going short perfectly on NVIDIA. The puts today were up over 30%. And this was a really, really amazing trade. I posted it in the Discord, and it was great, right? So the reason why I was initially starting to become bearish, right, on NVIDIA was because we saw SMH, which is the ETF for the semiconductors, as well as AMD start to get weak. So AMD specifically, guys, AMD specifically, I was mentioning how AMD, because it was this far, and before I continue, right, we look at all of these different stocks and all of these different companies that are related to each other because they move in unison generally, okay? So because AMD started to look kind of weak and there should have been a pullback in AMD, that led me to believe NVIDIA was going to get a pullback, okay? So AMD, the thing that made me bearish was that we were very far overextended to the upside in terms of the Bollinger Band. So the Bollinger Band denotes the extension outside or below where price is supposed to be. So if we're trading outside of the upper bands, price tends to return back inside. If we're trading below the lower bands, price tends to bounce, okay? So AMD looked very, very far overextended. SMH was also very far overextended. And what was NVIDIA doing? NVIDIA was consolidating. So as NVIDIA was consolidating, AMD was showing weakness. So this weakness, I knew would end up getting a pullback. And what ended up happening? We got a pullback and a fill of this gap at 165.50. Now moving forward, I think that there's more room for NVIDIA. As long as NVIDIA remains below 171, NVIDIA should be seeing 160. We should be falling much lower on NVIDIA, in my opinion. Once again, if NVIDIA falls, this in general is going to pull down overall stock market. It's going to pull down the NASDAQ. And the main reason is because NVIDIA is an AI-related stock. It has been one of the winners. It's been one of the largest winners for the past few months. When NVIDIA starts to show some weakness, money has to rotate out of NVIDIA and go into other stocks. And that's currently what we're seeing. So in general, when we're seeing weakness on NVIDIA, that is a good, clear sign that the market should start to tumble and it should start to see some weakness overall. Amazon. Amazon is getting a lot of love. We were bullish on Amazon down here at 212, 213. Once Amazon was about to break this wedge, essentially. And this was a bull flag. Wedge started to show some strength. Was bullish on Amazon down here. I gave two main levels for upside targets on Amazon. If we held 222, I said 230 is right around the corner. What ended up happening today? The high of the day, 230 on the dot to the penny. Amazon hit the target to the upside. Is this where you want to start becoming bullish on Amazon after a large upside move has already happened? Absolutely not. Absolutely not. This is a time where people are going to start taking profits, okay? This is Netflix. Netflix had a monstrous uptrend since April. Clearly, monstrous uptrend, multiple touches, acting as support. And then what ended up happening? We saw the uptrend break in the early days of July, right? A lot of these large tech stocks are in an uptrend. once Netflix broke this uptrend, this started to show me that there are going to be cracks in the overall market. And especially once we broke this uptrend, it became so easy to be bearish on Netflix because the uptrend was not going to sustain itself. As you can see here, what ended up happening was, yes, on July 2nd, we got a nice break to the downside. Spectacular. On July 3rd, however, we had a green candle with a retest of the trend line, but we could not break back above. This was an opportunity for people that didn't go short up here to re-short on a tap of the trend line, and we haven't seen these levels since. Netflix dropped from 1298, 1300-ish area, right? And now it is at 1189. It's down over $100. This is, in terms of a percentage, from the trend line, it's down almost 8.5%. From the highs, it's down 11%. This is clear-cut overall weakness. You cannot be bullish on this setup, clearly, right? So all of the downside targets hit, 1230 hit. Now we are just falling lower. So the main level on Netflix is the 1150 level now. There's still more room to go. Another $40 is right around the corner. This is very, very possible to see 1150 on Netflix. Be very careful about trying to catch a dip on Netflix right now. I would rather wait for a pullback to around 1150 to 1160. So Meta holding this 700 level is bullish, right? But for me to want to go long on Meta, as you can see, we are in a bull flag, right? For me to want to go long, I would want to see a close and hold above 713. Oddly enough, what ended up happening today? We tried to hold above 713. We ended up seeing a high and an open at 716. But 713 didn't hold. And that, in my opinion, is not a really reflective time of... I wouldn't want to try to go long into a bearish move into support on Meta currently. I would rather wait for a green candle above 713 for us to be more bullish on Meta or a move to the upside. Because currently what's happening is money is flowing out. It's flowing out of chips, and it's going to need to find... They're going to need to find a place to park their money. We're going to have to look for setups that are the best, highest probability risk reward for upside potential. And Meta above that 713 level does give room for a $10 move to the upside, at least to 724 in my opinion. So we're going to have to monitor that. But for now, it's still chopping. We're still at the bottom range of this bull flag. If we do not break above 713, Meta is going to end up breaking lower. This is not a very bullish situation if we can't break above that level of resistance. Ooh, Microsoft's getting real close to this trend line. It's getting really, really close to this uptrend. And it's starting to get close to breaking down lower. All right? So this is an uptrend on Microsoft that we've been monitoring since May. Multiple touches of support. Awesome. Riding along it like it's, the back of a... All right? So it's clearly holding very, very well. Today, what technically kind of happened? It looks like we ended up breaking a bit lower below that level. Closing on the lows as well. This is important because Microsoft has been the clear-cut uptrend winner. There hasn't been any sort of pullback potential in Microsoft, and it has held this uptrend level for a very long time. The fact that Microsoft is now starting to show cracks, that NVIDIA, AMD are starting to show cracks, very telling, in my opinion. Very, very telling in the market, in my opinion. Same concept as Netflix. If we get a retest of this trend line tomorrow, but we fail to close above it, awesome shorting opportunity, in my opinion, on Microsoft. Me personally, would I want to go short on Microsoft? Probably not, because it's been a just solid clear-cut winner. There hasn't been much fluidity in terms of price action. I would rather be short NVIDIA and the chips than just randomly being short on Microsoft. But we have to take a look and we have to maintain our focus on Microsoft doing this. Because if Microsoft starts to break, if it does not reclaim 508, 507, Microsoft is going to see 495, 490 area. And this could be a nice little solid pullback. Not going to be anything crazy. 2 to 3% pullback on the table on Microsoft. Be careful. I would not want to start being bullish on Microsoft at this point. Tesla, you would think the market is going to start showing some strength because money is flowing out of NVIDIA, out of these other large tech stocks. Should go somewhere. Tesla is really failing to start to capitalize on that weakness in these other stocks. So it's holding above 330. It's also technically holding above this fib level at 320. But, you know, it's not the most bullish setup. This is technically not an amazing bullish setup. The reason for that is you can simply just make a fib level from the most recent highs to the overall lows. We're holding below the 618% fib. Okay? If you want to make it from June's high to this low, this is still holding below the 618% fib on both cases. So you can see that this 331 level here, within 30 or 40 cents, it acts as the 618% fib level of resistance here on Tesla. And you can see why this is such an important level in terms of the fib levels and just in terms of 330 psychological level. Us being at this level of resistance is not amazing. What you want to see, obviously, is a break above this level of resistance. You want to see Tesla comfortably hold above 337 to 340 area. It holds that. Spectacular. It held the 320 level. So, by all means, you know, it bounced from the lows at 321 today. And it closed at 331. This is not, you know, you would rather want to try to go short at levels of support or a break of levels of resistance and a nice solid close above. That's what I'm looking for to be bullish on Tesla. Apple, I've been bullish on Apple since 200. Posted this screenshot on Twitter. This is a bull flag, right? Clear-cut strength. We were bullish down here. What ended up happening? Currently, right? We broke above the bull flag, the upper level of the bull flag, held technically above 210, technically held above support, and are now bouncing off of support. But what's interesting now is that similar to rotations in stocks, money should be flowing into Apple, Tesla, Amazon, because those were the biggest losers. Currently, Apple's not, you know, it's bullish, but it's not as bullish as it potentially should be if NVIDIA and the other chip-related stocks start getting pullbacks. So if Microsoft gets that pullback, we just saw, NVIDIA continues to pull back, AMD continues to pull back, we're going to see a lot of strength out of Apple. So the level that really, really needs to hold above on Apple is this 50% fib level at 214.66. Where are we actually? What are the odds? We are sitting right below this fib level. We closed at 214.40. Goes to show how important this fib level is and how important this level of resistance is as a whole. In general, for the next few months, definitely bullish on Apple. We've been bullish for a while now. This is clear-cut strength overall. I wouldn't want to be bearish on Apple because it's setting up for a move to the upside. I would rather be bearish on stocks that have already tapped out their resources. Does that make sense? Even though it's one of the losers, Apple has a really, really good bullish setup. So be wary and be very, very vigilant. Apple and Tesla move in unison most of the time. Google, same concept. Posted this on Twitter. Was bullish on Google down here at 178. We're bullish down here. The reason why is because this was a downtrend level on Google right here. We got a break, right? And as you can see, this downtrend level acted as a level of support. Nice and simple. I was bullish on Google. I thought we were going to end up getting a little bit of a pullback, a better opportunity to go long. This entire time I was bullish, but I was greedy. I was hoping we would get a nicer pullback. That never happened. It went to show how strong Google was. And the reason why is because it's been a loser. Google has been a clear-cut loser. While all of these other stocks are over here at all-time highs, Google, Amazon, Tesla, Apple, losers. So what ended up happening now? We held the 183 level on Google. We tapped perfectly to this level of resistance here at 193. And now the upside target again is 200. There's clear-cut strength in Google. There's clear-cut strength in a lot of these stocks. And what's happening now is we're touching the levels of profit taking. When a lot of these stocks are hitting levels of profit taking, is that a time when you want to start going long? Absolutely not. You want to start either waiting for a consolidation or waiting for a dip. But you don't want to go long into resistance here because it's risky. Like if people have been long since 178, 180, why would you want to chase $20 higher, $15 higher up here? Not smart. Doesn't make any sense. The NASDAQ is, I don't know, should be falling soon. Clearly also in an uptrend similar to the ones that we saw in Microsoft, right? And starting in May, we ended up breaking down below. And now for the past couple of weeks, couple of days, we are hugging this uptrend level. But it's not sustaining itself. All right. So I said that 23,500 was going to be a target to the upside on Netflix. We fell a bit short of 23,500. Not Netflix, NASDAQ. Fell a bit short of 23,500. Still showing a bit of weakness. Today did not help at all. We have a lot of large tech stocks reporting earnings tomorrow. So that should be very, very important for the NASDAQ, of course. But in general, this is not a bullish setup. We should be getting a pullback to 23,000 on the NASDAQ. Once we get this, it should happen very quickly. If within a day or two, we get a pullback to 23,000, not a time to be bullish because you're going to have painted two red candles. And this support is not strong enough, in my opinion. If we end up testing this within the next couple of days, things are going to start dumping a bit faster, in my opinion. I could be wrong, but in general, this is a profit-taking sort of setup on the NASDAQ, okay? This was a profit-taking sort of setup on NVIDIA. This was a profit-taking sort of setup on AMD, okay? My point is that a lot of these stocks all move in unison. So please be wary and please be careful about trying to overly become bullish at levels of resistance. And with that being said, something else you don't want to do is become overly bullish at levels of resistance on the SP500 futures. So as you can see, this clear-cut rising wedge pattern. Rising wedges are extremely, extremely bearish patterns. As you can see here, we've been hugging this trend line. We've been hugging it. Hugging it like it's an old friend we haven't seen in so long. Hugging the uptrend, the upper level of this trend. Okay? What's happening, though? What's happening? Let's zoom in. We haven't gotten a close above. We haven't gotten a single close above this trend line that is sustainable. So this is clear cut. The strength, we're starting to see fatigue. We're starting to see a bit of exhaustion. So this is consolidating, obviously, in a very, very tight range. Hugging the uptrend level. The S&P hasn't done much. And the rest of the large tech stocks are taking hits. This is not a time, in my opinion, to also want to really, really go long for the short term. Everything, in my opinion, is still pointed to a bit of a pullback. I could be completely wrong, This is not a time where you want to start being bearish. Start being bullish. This wick to the upside as well, this wick that we got on July 21st, this just begged for people to try to become bullish. The amount of people that probably became bullish as we broke above this trend line and are trapped. They're trapped. They have nowhere to go. The amount of people that are bullish over here, they're begging, they're hoping for the market to bounce. This is not the time where you want to hope for the market to bounce because we're already at all-time highs. Trying to be bullish up here is greedy. This is the time where you want to start taking profits. We've been long on the S&P since 5,000, since 4,800. This is the time where we wanted to take profits. I ended up taking profits over here after this bounce over here. This is where you want to start taking profits. Because it's the time to start taking profits, what ends up happening? Market either stagnates or it starts to pull back. So that's what's currently going on. Market is stagnating. I'm expecting the market to get a pullback. And it should be getting a pullback below 62,500. Below 62,500, we should easily see the 62,000 level, which is a 38.2% fib. Should be on the table. And with that being said, the IWM Russell 2000, I cannot be bullish. Like, I understand. Look, listen. I understand. I completely understand. This is a bull flag. Oh my God! Wow, bull flags. Oh, we should be rising. Woohoo! Yeah. I am having a little bit of trouble here to be overly bullish on the IWM when the tech stocks are failing. Right, the largest tech stocks are failing. Netflix is making new lows. AMD, NVDA are breaking to support. Meta is breaking. It's not showing strength. All these other large tech stocks are hitting resistance. The S&P is at the level of resistance on the trend line, at the top of the rising wedge. You think the Russell is going to be like, oh, okay, guys, let's be bullish. Let's see. No. Not the time, in my opinion. Be overly bullish on the Russell. Technically, if it holds 222, sure. Sure, if it holds 222. You could be tight long. You could hold longs tight. But 222 is such an important level on the IWM because it maintains upward momentum. If we maintain upward momentum for this move, then sure. But technically, is this the time to want to really be long? No, because the downside potential is just so much better. We're already tapping on prior levels of resistance here at 226, 227 area. So yeah, we could bounce another $4 from here. But once we hit 227, nice 3 to 4% pullback is right around the corner, in my opinion. I can't really be bullish on the IWM with this setup. It's very, very difficult. The VIX is so important to monitor. We look at this every single day. The reason why is because it has an inverse relationship to the overall market. So if the VIX is falling, right? It's falling. The overall market should be rising. Does the opposite, okay? So the VIX, $17 on the VIX is a very, very important level. We broke above it earlier in the day. When the market was tumbling, the VIX broke above it. But once again, the VIX is consolidating and tightening up at a level of support here. Okay? If a stock is tightening up and holding a level of support at a range, what usually happens? We end up bouncing, right? So, if we're holding a range and we end up bouncing on the VIX, because it has an inverse relationship, that means the overall market should be falling. So this is just setting up for a bullish move on the VIX. There's just so many reasons and so many different stocks that are essentially bearish setups, or they're hitting levels of resistance on the overall market. We have a lot of large tech stocks reporting earnings tomorrow as well. A lot is up in the air. All right, so I would just be very, very careful and wary about being overly bullish on the market at this point. it's now getting to a point where things are going to be taking profit. We're at profit taking levels. We're not at levels to take new long positions. We're at profit taking levels or short taking levels. That's my thought process on the overall market. I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Have an amazing day.